Everybody, welcome to TraderMerlin Show for your weekend edition. It is Friday. Hope you all did well today. Looking rather dapper. And to thank Katie for taking some new pictures of me, as you guys saw. At least I hope you saw. No AI generated pictures today because I took this new picture that Katie took of me. That's the one on the right hand side here, and it looks great. I actually look like a clean shaven, somewhat decent person. The one on the right, I look just disheveled, like I just crawled out of a ditch and put on a nice jacket and a bow tie. So I figured it was time for a little bit of an upgrade there. And yeah, Katie took those pictures for me. So I took a few more, and I actually put this through the AI program. The pictures of me in AI look absolutely terrible, absolutely horrible. But anyway, yeah. Can anybody tell me what this tie represents? How about that one? I know we have some fans in the crowd here. Anyway, cheers to all of you. Happy Friday. I hope you did well today. Of course, as you know, I did not do too well. My boil position did not do what I thought I was going to do. Still feeling some pain. And I typically like to pair my whiskey on Friday with the way that the day or potentially the week went. Now, all in all, my week was actually okay. I had other trades that balanced out my boil. The puts did well today. I'm going to take a real quick cheers to you, and then I'll tell you what I'm drinking because it sets the stage for what happened to me today. Oh, that's just long overdue. I'm actually going with the Slaughterhouse American Whiskey. I figured how appropriate, given what's happened with natural gas this week. As you guys know, on Monday, I sold some puts on boil. Just, you know, look at the levels, thought it was oversold. I'm feeling like there's short squeeze coming. My timing a little bit off here, significantly off. If you notice for the week, I'm just going to start there. I normally don't start with natural gas, but let's go down and start with natural gas because it was ridiculous. Down another 2.69%. What I want to show you here is the weekly. And generally, when you have bad weeks, you know, you're going to get a bounce. It has been 1, 2, 3, 4, 5, 6, 7, 8 consecutive weeks. So exactly 2 months of nothing but sell-off for natural gas, and it's dropped 65%. Or sorry, 2 months, excuse me. 65% in 2 months. This week alone, simply from the close of last Friday, down 16%. So when we opened up on Monday, I'll show you kind of what my thought process was here. When we open up on Monday, let me get that line out of there. I'll go to where we ended today. And there's Monday. So we opened up on Monday. It sold off a little bit. Near the end of the day there, I was like, man, just feeling the bounce coming, feeling the short squeeze coming. I thought we might sell off a 5% maybe for the week, which would have balanced my position out perfectly. Instead, ended up being down 12% for the week on natural gas, which is just crazy. I'm really looking forward to having Mr. Roland on the program on Tuesday to talk more about what's really going on with natural gas. It's beyond the level of intellectual capacity that I have for financial markets to look at all the inner workings of natural gas. So hopefully he'll shed some light on it. He'll probably laugh at me and be like, yeah, you're a fool for doing that. Anyway, I'm not freaking out at this point because I'm no problem. Next week, I will start selling weekly calls. If you've seen the premium on it, the weekly calls have been great. And if it continues to drop a little bit, fine. But at some point, you're going to see natural gas have a bounce. And if I'm selling premium week after week after week, lowering my dollar cost average, I don't need as big of a bounce. So unfortunately, it's put myself in a little bit of a hole. The good news is you don't put all your eggs in one basket, right? You never put all your eggs in one basket. Therefore, I've got other trades that are balancing out a lot of this. As you guys know, I mentioned yesterday, so I bought directionally, which I normally don't do, but bought puts on the QQQs, and that has been doing pretty good. So anybody guess what this tie represents? Did I see anybody come through there? No one got it, huh? Oh my God. Tom, don't compare me to Brandon Wendell, please. Brandon, he copied, he's copying, what's his name? It's the guy from, I've interviewed him before, Rogers, Jim Rogers. So Jim Rogers is famous for wearing a tie, and Brandon had to have this little kitschy, cool little thing. I'm not trying to start a trend with a bow tie, that's for damn sure. Nope, doesn't singleize Pee Wee Herman. If I had prizes, I would give you one. Okay, let's start with the bottom, work our way to the top so we can get on with the show today and talk about kind of what was moving these markets. And obviously we know that today's markets were directly impacted by the earnings last night of Google, of Amazon, and of Apple. Crazy crazy, crazy moves out there because of those ones. I'm going to start at the bottom, which had really no impact whatsoever from Google, Apple, or Amazon. It was crude oil. We talked about this a couple days ago, and I was like, look, if anything, you're selling off from an overhead supply level, you're going to come back down into the next area of demand. I said there really isn't any until you get down to the 72 to 73 mark, and here we are now at 73.17 on crude oil, down 3.57% on the day. Now, I guess the real question is this the bounce point? Do you have that feeling that, okay, this demand zone is going to hold? Well, if you look at the longer term picture, it's still trending down, at least since March of last year. We got a lower highs, lower lows. So it really hasn't broken the downtrend, although we could make the argument that it's consolidating here and really traversing sideways. So I'm going to take that overhead supply level, which was there and I feel has probably been chewed up, and now go back to the range-bound market here. Nope, it's not Bill Nye imitation. This actually represents a specific group right here. Yep, it's not the Illuminati. Yeah, it's not the Illuminati. Nope. Come on, someone's got to know what the little donuts mean. That's your hint. You got the hint right there. It's a donut shape. So with crude oil, I have USO, which I've been holding for a while, and I've been selling calls against that, so that's fine with me. I guess if I was looking to open a new position, I would certainly be open to it at current levels, but you've got to put a stop down below these lows here if you're going directionally below $70, because it just feels like it's been traversing sideways. Again, if it breaks out of this, it could have a very, very strong move. And I've been reading more and more from quote-unquote industry experts who say that crude oil is going to $60 and then $40 per barrel, which, let's just take a step back and look at the big picture. I don't know if I necessarily subscribe to those prices, but let's look at where 60 is. There's 60 on your chart, which at current levels would put the price roughly, since I'm doing this on the fly, roughly 17% lower from current price. And then you have the forecast of $40, which would be way down here. Look, at this point, I'm not worrying about $40. I'll worry about 60. So, well, you got some good guesses. Pee Wee Herman, nope. Devo, nope. Homer Simpson, nope. Scotch, nope. Ron Burgundy, nope. It's derived from a musician who used to wear a smock, if you will, almost like a dress. He's a drummer, and he used to always wear this pattern when this band got started. There you go. I'm dropping some hints there. Of course, at this point, you all got to get it. This is like the trivia day for the show. So crude oil, the worst performer by a large margin, down 3.52%. Right on the heels of that, though, you had gold, a huge about face, and I mentioned this 1876 level. I did not sell puts today. I was actually looking to acquire some gold. I actually sold puts on silver today instead of gold. I did the 20 puts, and I sold those for 2 weeks out. Really till the February 17th was the newest addition to my positions. Sold puts on SLV, which looks like this. Right, and you guys see I've got some grid low. There you go. Dave wins. It's actually John Fishman, the drummer for Fish. He used to wear a smock made out of this pattern, and he now it's kind of this famous pattern they make for everything. So Dave wins. It's the drummer for Fish. This symbol, this bow tie pattern. Whenever you see it, it's a representation of Fish. And if you ever get stuck behind a silver Toyota double cab TRD Pro pickup truck, I have a red donut on the back of my truck as that, because I'm a Fish fan, as you guys all know. Ooh, yeah. But those are, that's one band, Patrick, I never got to see. I never got to see Rush. I actually had tickets to see Rush multiple times, didn't go. And Neil Peart, arguably one of the best drummers ever to grace the stage. Dave Googled it. Yeah, the donut necktie. Anyway, let's get back off the music show. Maybe I'll do a side show just talking about music and live music shows. But the silver, I did SLV today. That was around midday on that one. Silver was just getting absolutely slaughtered, as you can see down today, 4.64%. So I sold the 20s and collected about 1.1% premium for 2 weeks, which in my opinion, pretty damn good. There you go. We'll have to do some drawings out there for free books at some point. I need to finish the book first, Gary. Let's not get ahead of ourselves. I really want to finish it, but I've been so bogged down. I've got 2 friends in town, or family members in town from Munich, Germany, so I've been kind of busy in the evenings. Anyway, moving up our list, gold. I'm going to watch this one on Monday. I am long-term very bullish on gold, but right now you see the way those last 2 candles have formed, extremely aggressive, powerful moves. I did not look and research what caused that move today. partially, I believe it's because the dollar was so strong. As you guys know, we had the dollar index up 1.23%. And when you have big green candles in the dollar, that usually equates to big red candles in the equity markets. And that's what we've got currently with our present situation. But look at the picture here, right? If you look at this dollar index going back to, let's say, September of last year, aggressive downtrend, peaking out at about 115, bottoming out sub 101. And I would argue that trend is still intact. And we talked about it coming down to this yellow box area of demand, bouncing off of that one. Notice that it tiptoed down below it yesterday, or gapped down below it, and then ripped back up. So now the question is, where do we come up to? And if we get to this upper red line, which is about 103.30, that's the logical place for the dollar to go, just because it was a base drop, an area of hesitation. You could also argue that maybe higher up, right around 105. So there is still a move up for the dollar. I want to see what happens this weekend, how the dust settles, and potentially what will look like when we start trading on Monday morning. Because if we get up to this 103 and the dollar starts to show some weakness here, well, then bullishness back in the equity market. So that is your gold, your dollar, your crude oil, your Bitcoin. Well, nothing really to speak of here, down 2.17% on the day, but meh. I guess I don't see anything to speak of there. Here's, for me, the real story. You do have a formation happening today. If you guys look at that picture right there, can anybody tell me, where's my prize department? If I only had a sponsor that could give away prizes, now that would be fun. You have a pattern formed today on the NASDAQ 100 futures. Now, if you look at the QQQ, it's not the same, right? You have a different picture, but look at that picture on the NASDAQ futures, and you have a pattern that is a very sought after one. It's actually called a bearish harami. Now, when you have an aggressive rally like this, and then the one day kind of closes within the previous day, and that's what happened here, almost the entire range was inside of yesterday's range, that is a potential reversal sign for the markets going forward. Yes, Les says harami, but it's a bearish harami in here. John Rowland, is that the John Rowland, my Tuesday guess? Hey, good to see you. A bullish Garamond. I don't know if I've heard that one, Gary. Are you trying to mess with the guy who's drinking Slaughterhouse whiskey today? Is that what's happening? You're like, let's just mess with him. Maybe he had a couple glasses earlier because it was a natural gas trade. Well, cheers to that one. It's the bullish Garamond. I love it. Oh, the fun we have. Okay, so in looking at this picture, I guess the question for next week is going to be, how do we react from this? Obviously, if we look at the price moves of the major components of the NASDAQ today, right? Let's look at Meta. So Meta, epic. I mean, guys, I can tell you this. I'm waiting Monday morning. And if I get a close down below the low from the initial earnings gap, which is right here on the low of this candle from yesterday, that low is 180.16. If I get the Meta opening somewhere above there and start to close below 180, I'm going to short the hell out of this thing because that thing could have a nice big gap fill. I love it. I love it. I love it. So great shooting star today. After a big gap, this is a great potential short. I'm not saying, let me just zoom in on myself on this. I wish I had the effect so I could just go zoom in, zoom in, zoom in. Do not just short Meta on the open on Monday, right? Wait and see how things shape up. Give it a minute for the market orders to fill through, and then start to see if the trend does break down below 180. Then possibly open a short position, right? Again, you have to do your due diligence here, but yeah, this looks like it's shaping up for a potential reversal there. We keep moving through our FANG stocks, or the top components of the NASDAQ. Let's go look at Alphabet or Google, right? Google, on that earnings announcement, or actually because of Facebook's announcement, jumped up, and then last night, because of their earnings announcement, gapping down today. Now, it looked great for a while, but gave up the ghost near the end of the session. Here's the 5-minute. Things were looking wonderful for Google, right? Recoup some of those losses. Hey, great. And then just second half of the day, womp, womp, tanking and ultimately ending down the day about 3.2%. So Google, because it has GOOG and GOOGL shares, you guys notice here is GOOG. Here's GOOGL. One of those is preferred. They're Class A and Class C. One of them has voting rights, and the other one does not. That's just a weird classification they made. So you actually have two different classifications, but both of them look like they're going to come and close that gap that formed at $100 on Google. Moving up our list. Amazon. All right, so Amazon really taken a drubbing today, down 8%, giving everything back from that Meta earnings announcement gap that the NASDAQ rejoiced over, ripped back down, although it really hasn't changed the trajectory of the trend that started late last year, right? You're making higher lows, higher highs, so it looks like you're back in an uptrend in Amazon, but a nice about face here on their earnings announcement. What's the difference between Class A and Class C? No problem, Patrick. It's a noob question. What they did, and I forget all the circumstances, but they created two classes of shares. I believe it's when they did a stock split. If I remember correctly, I hope I'm not messing this one up, but I think they did a stock split years ago. And when they split, there was a new class of shares created. There's a C and an A, and I don't remember which one is which, but one of those has voting rights. The other one has no voting rights. And they're both trading pretty much the same value. And let's be honest. Does anybody in this room right now, you can simply type yes or no, does anybody really care or vote for the stocks that you hold? I mean, I get those things all the time when I hold a position. It says, oh, here's the ballot. Normally, I don't even fill it in. I don't care. I know that my 100 shares or 1,000 shares is going to have no significance in the grand scheme of things when there's 5 billion shares out there. So I don't care whether I have voting rights or not. Some of you might. Some might. But for me, that's one of the allures of buying stocks, right? Is you're an owner. You get to have a say in this company. Oh, bull. Your vote means really nothing. It really has no say. Unless you've got 100 million shares or a percentage of the float, it doesn't matter. Elon Musk actually made and as Mo says, as an investor, yes, because you believe that you are doing the right thing and helping the cause. But I mean, honestly, our one little vote, probably not going to steer the boat. Now, here's the thing. You guys may have seen this comment from Elon Musk. Elon Musk was saying there's a couple of companies that he says they control the stock market. And those are the companies that companies hire. So let's say Amazon. They might hire a company to help with all the voting, right? Because if you've got a share, you can now vote. So what they'll do is they hire this company, and the company will send out emails or actual physical mail to you saying, hey, you own some Amazon shares. Here's the ballot. Here's the vote date. We recommend voting for this person. And Elon argues that that's the most powerful entity in the world because they are swaying the millions of people who aren't going to vote for this group and making it very biased. I thought it was very interesting the way that one worked. Anyway, it's the whiskey talking, guys. So you got me going on some tangents today. See, I'm right there with Koja. Unless I have 20% of the shares, I could care less. I open a class action. Often the amount of dividends are different between classes too. Correct. Yep. Some will pay dividends, some don't. But I don't know if that's a Class C is always does this, this, and this, or if they specify. I'm not exactly sure on that one, but they're very different in what you can get with those. Certainly the voting, I do believe they both pay dividends, though, I think. What would happen there over time is if you have one class that pays dividends and one that doesn't, is you would see one of those deteriorating more than the other, right, because of the dividend payments. All right, almost done. We went through the NASDAQ. Actually, no, we did not. We stopped at Google and then Amazon, and then here's the Big Daddy, which honestly was impressive as all hell today. I got to say, this one really, I was looking last night thinking we are going to have a meltdown on Friday. I was laughing last night. I'm like, man, I just got 40 put options on the NASDAQ. This is going to be a great day. Well, look what happened with Apple. I mean, this is a wild ride. They did not perform that well on their earnings. You can see here's the overnight. Right as they reported earnings, we had a huge sell-off. Let me draw the percentage there from where we closed at. The bottom fell about 5.7%. And since that low that happened in the after-hours session to where we opened, Apple rallied to the tune of 4.29%, gaining that back. All in all, from the bottom in that after-hours sell-off, we've rallied almost 11% for Apple. Of course, being the number one component of the S&P 500, being the number one component of the NASDAQ 100, this is a major impact on our indexes out there today. So thankfully, for anybody who was long NASDAQ or S&P, Apple saved the day. Apple being up 2.44% is really prevented this market from really crapping the bed and going down much more. If Apple was down, let's say 3% or 5% like they were in the after hours, you'd be looking at NASDAQ down probably 4% today. So Apple really saving the day, even though it was not a huge day, only 2.44%, it absolutely bailed out our equity markets today. So Thank Apple if you guys are long. I'm cursing Apple because I wanted them to tank this market, but oh well. It is what it is. All right, lastly, we got 3 more. Podium time. I'm actually at the podium. All right, bronze medal goes to the S&P 500, which also on the daily futures has a bearish Harami formation, down 1.04%. Russell 2000 also a bearish Harami formation, which, coming after 3 really powerful days, there is a school of thought that says when you have 3 really aggressive candles in a row like this is called they're green here, but that would be equating to white. Red candles would be black, green would be white. This would equate to what's called 3 white soldiers, and that generally indicates a potential reversal if you look at the candlestick books by Steve Nissen. Down 0.72% for the Russell. All in all, not that bad considering all of the bad news looming with the equity market or with the FANG stocks. And then Dow. Since these components are not really impacting the Dow very much, it didn't have much of an impact. Notice Dow pretty much traversing sideways. Again, Tom, this has got to be your new baby right here. This is it. Welcome to the super bubble. I think that, to be honest, Shmav, and that's a good point. He says, welcome to the super bubble. Darren Komodo did a really good presentation last year when I saw it, talking about the everything bubble, the bond market bubble, the equity market bubble, the housing market bubble. I mean, you could add bubbles on top of those bubbles. It just kept growing. It feels to me, and this is just my take, some of you feel very differently, that's fine. It feels like a lot of the air has been let out of that bubble, but I don't feel like anything has popped. It feels like someone just kind of slowly squeaked that bubble out and just kind of let it out a little bit, but we didn't get the boom that most people were waiting for. Is that the proverbial soft landing that the Fed has been saying is coming? I don't know. All I can do is be an observer. I'm not really having an impact on what happens with this soft landing or the bubbles popping. I was hoping for a more dramatic sell-off. Now, are we done? Personally, I don't believe that we are done overall with our market sell-off. Hopefully, we'll go down a little bit more. But either way, I just got to try to play these bounces. Right now, I'm actually playing the short side, expecting that the announcements from Apple, Amazon, Google, and Meta this week were the catalyst to spike the markets, but the realization is we're not out of the woods, right? But a lot of them did very poorly on earnings. Meta beat earnings and then all of a sudden did a $40 billion buyback as well as laying off 11,000 people. Okay, that's going to have a pretty significant impact on their bottom line. But what did Google really do? They lost bad on ad revenue. What did Apple really do? They weren't that great on their earnings. And what did Amazon do? Not great. So I feel like the fear will start to build up a little bit more. Now, next week we have, I forget the day, we'll talk about it on Monday, but we have an announcement or a speech by Jerome Powell next week. And that's going to happen at noon East Coast time. So midway through the day, and you saw what happened when Jerome Powell opened his mouth on Wednesday at that press conference. It was not the announcement itself of 25 basis point increase. It was Jerome Powell opened his mouth and talked about the markets. I'll do it on a 1 minute just to have fun. Let's go to the 1 minute chart here and go back to yesterday, right? I'll zoom in, right? Yeah, we got it. That's today. And I want to go back. There it is. So here's Wednesday. Just to put it in perspective, and this is why we got to be careful next Wednesday. I'm not sure if it's Wednesday, but next week I'll tell you on Monday what day it is. But here was that initial announcement of 25 basis point increase, right? Market kind of knew that. So it had a knee-jerk whipsaw reaction, sold off, rallied, and then sold off again. And then Jerome Powell started talking. And the industry basically, in my opinion, feels like they shrugged off what Jerome Powell talked about, and that's when we have the huge move. So be very careful. We'll talk about it next week when Jerome Powell has his presentation, and any comments that allude to tapering, reversals, unwinding more of the balance sheet, inflation, interest rates. We could go back to some of the economic data for today, which is kind of really impressive. There's a good question that came through from this one right here, from Tran. Tran says the unemployment number today was better than expected. Why did markets sell off? Shouldn't this be a positive thing? Yeah, here is your unemployment number, right? We're expecting to increase on unemployment, going from 3.5 to 3.6. Honestly, no big deal. Slightly up. Anything under 5% is pretty damn good. Well, instead of going up to 3.6, we came out at 3.4. So I could see your perspective, Tran, where you're going, wow, this is good for the economy. It means that there's fewer people are unemployed. That means more people working. That should be good for the markets, right? Not so quick. And it's such a challenge in trading because you could look at one thing as being a positive factor, like those unemployment numbers. However, I believe the reality is that traders are like, oh man, if unemployment's rising, then the Fed has a certain playbook, right? If unemployment numbers are going up and we're seeing go 3.6, 3.7, 3.9, 4, 4.5, 5%, the Fed is going to start to slow down their rate increases and maybe reverse because they don't want to rock the unemployment boat too much. But if everything seems to be doing well and inflation is still high, yet unemployment numbers are declining, it's a green light for the Fed to raise more and be more aggressive because it hasn't impacted the employment data yet. Obviously, it's going to at some point. Now, I have not looked at this. Let's go look at the Fed funds futures just to see what happened out there today, because the unemployment numbers may have shifted the belief, and it did. Oh, it did. You guys may remember yesterday there was a 90-something% chance of a 25 basis point increase and no chance of 50. Well, now all of a sudden today it just squeaked onto the table 50 basis points. Just barely eking into the conversation. So it shifted that argument just a little bit. And that's probably why you saw this happen today. It basically gave the green light to the Fed to be more aggressive, right? We heard him say a couple more raises on Wednesday, right? Just a couple more. And he also said substantially more evidence in order to cut. So today's announcement by unemployment basically said, let's not worry about cutting. Let's keep raising, because he said multiple times at the press conference, I'd rather do too much than do too little. And that's why the market, at least from my perspective, why the markets were so negative today. Yes, we could look at the earnings announcements from Apple and Amazon and Google, but really, I think it's that unemployment number really was a game changer, in my opinion. So Rajesh, if we saw those unemployment numbers jump from 3.5, expectations were 3.6. If they came out at 4%, then the probability would be that the Fed might start to think about not raising and maybe pivot, right? I think personally that the Fed's not going to pivot until unemployment gets to well over 4%, most likely 5%. That's just my personal feeling. And who knows? I could be completely wrong. Hopefully I'm not, but I could be. All right, Jay Powell, a couple more hikes. Market, let's go. Exactly. And that's why markets rejoice. But now with this number, not only could there see a couple more hikes, we could see a few more hikes and maybe higher percentage, which is what the Fed funds futures is showing us today. You guys notice here, a week ago, there was a 0.2% chance of them keeping it right where it's at the next meeting. Well, that changed. Actually, here it is. We're currently, yesterday, it was 17%, that we were going to keep it exactly the same at the next meeting. Now, no chance. And now it's starting to creep in, probability of 50 basis points. So that is unemployment numbers right there impacting your market. Always pay attention to those ones. All right, let me see here. I've been neglecting the chat. I apologize here. Tony Miller says, do you think Jerome Powell is going to keep raising interest rates and destroying money until we crash? Two separate things there. Do I think Jerome Powell, three separate things. Do I think Jerome Powell is going to keep raising interest rates? Yes, I think he's going to keep raising interest rates. And destroying money. Yes, I think the Fed, they have to reduce their balance sheet. They're way, 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 way too extended. And if we do have another substantial crisis, they need to have, fresh powder and not be overloaded. So I think it's important for them to unwind their balance sheet. So the first two, I believe, yes. The third one said, until we crash. That's the debatable one. And it really is, are we going to crash? Obviously, I don't know. I'm no oracle. I wish I was. I'd be a gajillionaire at this point. However, a crash would imply a very sharp, aggressive, painful move in the market. If anything, I think you're going to have a gradual decline in things. I don't think it's going to be a catastrophic just meltdown. I think, I do believe that overall we'll see these markets continue to drift lower. As I mentioned this year, I think Q1 is going to be positive. I think you'll see the S&P look great for Q1. Q2 start to level out. Q3 and 4, I think we sell off because the data is not quite there. And maybe this argument today with unemployment could be that piece that bolsters Jerome Powell's decision to raise a little bit more aggressively, because he made it very clear, I'd rather do too much than too little. So stopping at the next meeting, that's too little and too early. And he doesn't need to, because unemployment's not impacted. If unemployment was much higher, he may have a different viewpoint on that one. But there you go. Let's see. That was Tony's. Anthony, only tech companies are the only companies laying off people only to be able to beat earnings. And I don't know about that. There's a lot of people laying off, and obviously I'm not looking at all of them. I just don't have time to look at everything. But I think the vast majority of companies are considering, if not already implementing layoffs, simply because lean times, money's getting more expensive. When we look at the bond yields, let's go out there and take a peek. Of course, we had Mr. Bill Addis in the program yesterday. I was doing some AI graphics today, but here is, I love the one I did for Bill yesterday. Here's the 10-year. Right here, what happened today the last few days has been just an epic run for that 10-year. Come on, and today was actually pretty good too. Let me go back to current data, not months ago. What am I doing over here? Come on, there we go. So today, epic move to the upside, but it really is stuck with this downtrending channel, and also I would contend it's in this sideways channel right now. So I'm going to do a double channel. Ooh, we're going to double channel this one. Put it right there, drop that line there, and so I will keep that going out here. You know, it looks to me like the trend is certainly lower for yields. However, a normal market would have those yields getting higher. And Bill Addis also was echoing that, saying, I think that you're going to see those bond yields going up as going forward, just the natural course of market. So if that does happen, that could put a further pressure on the overall markets, particularly real estate. But yeah, I think all companies do that. They'll lay off people. It gives them a better impression on their earnings, and they'll do a share buyback because that makes you look like you're earning more money per share, etc. Until some catastrophic event happens with liquidity. Yep. What people need to ask is if Jay Powell has my best interest in the mind. You know, and that's the challenging part. Personally, I'm going to go out on the limb and say no. Jay Powell does not. These central bankers don't really care so much about you and me. At least that's my jaded opinion. I know many of you believe that they do. That's their job, is to have full employment and provide stability for the currency. That's their mandate. Well, then do that. The dollar has not been that stable. It's been a very volatile asset class, and we have full employment. So bravo to the Fed. But I'll tell you what, if I pumped $15 trillion into anything in 2 years, I can modify it to say whatever I want. And if you got a lagging job market that looks, too many people unemployed, you pump in $15 trillion and give a lot of that to businesses, they'll start hiring like crazy. Free money, great. I'll bring on more employees. But now's the time where it starts to lean out, right? Because the money's not coming in anymore. Fed's tightening. Therefore, these businesses might feel a little bit of a pinch. So I think it's a natural course of businesses. Again, I've talked about this over the past couple of days. When you are struggling or times look tight, you get rid of the fat. You get rid of the people who aren't carrying their weight in the business, lean things down a little bit, and then you can really focus on your core team, your core competency, and you'll probably do even better. Chase, I almost got offended for a second. I was like, you're saying F you to me? Yeah, F your puts, F your call. Jay Powell will have you by the balls. Look, he's going to do whatever he wants, but personally, Jay Powell is owned by bankers. All right? He is representing banks and financial institutions. So I will always, and no one can change my mind on this, I will always believe that Jerome Powell and the Fed is in the pocket of the banks. Goldman Sachs, JP Morgan, Merrill Lynch, Chase, Bank of America, they're the ones who are driving Jerome Powell's decisions. That's just, I will never have an opinion to change that because it just simply seems the way that it has been. Right? They're elected and representing the banks. So that's their number one, even though they don't say it, that's their number one interest. Merlin, any thoughts about Intel doing nothing for ages? Not really. Let's look at Intel since I'm on a rant today, and I got to make sure that Big Eb and you guys don't get me going into a two-hour show today. I'll try to make sure I button this one up. Here's Intel, right? And I mapped out this sideways range for a while. Kind of interesting that today, you guys notice, we literally came up. I did not modify this chart, right? I'm not trying to be like, hey, look at me. But we did have this yellow box drawn on for a week or two now, saying we're kind of range bound on Intel. You look at that peak, which was at 31.17. Today, our dead high was 31.17. That is pretty crazy to see those levels on Intel. Now, any comment on it? No, look, it's one of those things where you look at a company like Intel and you go, they are such a juggernaut. They've got to be doing better. Well, price tells me they're not, right? I actually sold puts on Intel, so I'm looking to potentially buy some, but at much lower prices. I think 26 is my number, so I'm way down here. I sold the $26 puts on this earnings day. Yeah, I'm down here at 26. Got a great rate of return, and I was fine to own it that low on the curve. Great. I don't really care for Intel or AMD. I don't really have a dog in that fight whatsoever. But the chart tells you they're not doing much. Even in these really robust times when the pandemic hit, markets soared and Intel didn't do squat. Conversely, you look at AMD, and when the pandemic hit, what did AMD do? Wham! AMD was ripping to the upside, huge gain. So clearly they've lost their power, and maybe AMD is making better chips, better relationships, whatever, but this chart looks better too. So if I had to buy one of them, I'm going AMD. Why? Because look at the short-term trend since October. Higher highs, higher lows. I look at the short-term trend on Intel, sideways, chop. That's it. Thank you, Randy. You're trying to get it. That's pretty funny. Yeah, I'm sure that Mr. SS called every level out here, and he's going to boast about it. And he'll probably post out a tweet and use that as a sales practice to get people to sign up for his school. Oh, gotta love that guy. Oh, man. What a clown. So there you go. That's my thoughts. My thoughts on Intel. Nothing really good on Intel, honestly. Really, so that's for you, Koja. Agent Sancho, their job is to take care of the corporate America. That's different. Yep, it is. I personally think it is. Now, look, when we watch these press conferences, it's presented as if they're representing us, right? Just like your politicians. And I don't want to get political here. I always made it a point that I don't want to talk politics on the show. But I think most of you would agree, the vast majority of politicians go into political office with great ambitions of changing the world. And once they get in there, it's like, oh, I'm in now. How can I make more money off this? And I don't think they have my best interest at heart. I look at some of the bills that have gone through and go, how does that benefit me? How does that benefit the United States or America, regardless of political affiliation? It's like lining their pockets. So, that's why trading is such a beautiful thing. It's you against yourself. And just keep on following those rules, learning, improving, and then it doesn't matter which president is in office. It doesn't matter which party is running it. It doesn't matter what central bankers say. You can just adjust and pivot yourself and take advantage of those markets. That's why I will trade until the day they put me in a casket. Actually, no, sorry, until they put me in the incinerator. I'll probably get incinerated with a laptop. Why not? Let me see. Just in case I wake up in the incinerator, I can fire one last trade. Thank you, Koja. Appreciate that very much. Thank you so much. All right. March, April, natural gas comes back normally, but JR is on this chat. John will be on Tuesday. John will be on Tuesday to get on. So let me go through a couple other questions that came through here. Tran, I got your question on the unemployment number today was better than expected. There you go. This one I have to get to just real quick. Mark, you probably haven't watched this show very much because the answer to this question is very, very simple. He says, thoughts on Heart Test Labs, HSCS. Number one, never seen it. Number two, I wouldn't touch it. This is who cares? I could care less about a stock that was 78 cents on Thursday, jumped to a 225 by Monday, and now is at $3.95 this Friday. I don't care. This is thinly traded. This is the pump and dump. Now, they may be doing something great, but honestly, this is outside the scope of what I'm trying to accomplish as a trader, which is consistency. You cannot, I repeat, you cannot be consistent trading these things. This thing's up 139% today. So you're asking me, like, should I buy it? What should you do if you own it? If I own this thing, I'd be unloading every single share. If I'm up 139% in any one day on anything, I'm unloading. Dump. Get rid of it. So it's not the focus of this show. There's a whole bunch of other people out there that will tell you they make a killing and make millions of dollars trading penny stocks. I call bullshit. I think it's an actual joke. I think that most people trade penny stocks will ultimately blow their accounts because they continue to buy penny stocks. There's a reason it's a penny stock. It's going to zero. Now, once out of 100, you might hit a super flyer and make a ton of money, but I think you just give it all back and gamble trade. So, nope. Sorry, Mark. Not for me. I'd rather trade something that's more consistent and gives me a little more predictability. Scott says, I got a chance to watch your end of the year wrap up episode. In it, you mentioned one of your trading accounts that you had 94% success rate over the past year. I'm curious, have you ever done a video detailing the specifics of the trade plan you use in that account? If not, is that something you're willing to do one day? Not on here. At some point, I have had the discussions and thoughts about starting my own little trading thing and monetizing some things. Right now, I've been doing this show for almost 3 years now. Actually, at the end of February, it'll be 3 years in a row that I've been doing this show 5 days a week for free. And I think many of you would agree that there's a lot of value in there. There's, at least in this show. Now, granted, some days we go off tangent, some days we have a little too much fun, some days we're a little too serious, sometimes I'm just a cynical jerk. But I feel like I'm already giving away way too much for free. So at some point, what I might do is I might monetize it. You can go and look at the show and glean from it the general gist of the strategies and tactics. But as far as getting into the actual details, showing executions, no, that's stuff that people are charging hundreds of dollars, if not thousands of dollars a month for in their trading rooms. And that may be something I do down the road. But for now, I'll just keep this as a free thing for fun. So there you go. Thank you, Patrick. I appreciate that. Let's see. Which one is this? All right. This came in the day of Jerome Powell's speech. Eric says, I tried to trade the first 7 minutes of Jerome Powell's speech. See it as he keeps saying continued raising of rates until inflation shows better declines. That says bad news, yet the market bumped up. What gives? Was I off? This is kind of risky time to get in. Really, the best advice is to stay away until after he's done talking. Yes. And I've mentioned that many times. There's this whipsaw effect where regardless of what he says, whether he says something positive for the markets or bad for the markets overall, you're going to get it whipping up, you're going to get it whipping down, and then trading that, to me, is one of the fastest ways to lose money, is trading the actual announcement itself. So I've always encouraged people, wait 15 minutes till after the announcement, then start trading. Let the dust settle, let the big stuff get out of the way. Thanks, Larry. This is... It's actually one that I found. I was walking. What was the last concert I went to? I think this is in Las Vegas. I went to a fish show when I got COVID, and I found this sitting on the floor, and I had to grab it because it's a fish tie, and I'm a fish fan. So hey, Larry, have a good flight, my friend. Larry is in New York today, coming back from teaching out in Long Island. So looking forward to having you back here, Larry. I've got an In-N-Out burger waiting for you. No, Larry doesn't drink. Anyway, yeah. The advice is, and OTA hates the word recommendation because that now makes us sound like a financial advisor. This is not an OTA program, so I can say it. I recommend, I encourage, and I implore you to not trade these announcements. Why? Because it's risk. We just looked at the FOMC announcement on Wednesday. It's great if you're on the right side, but literally it's rolling the dice. It's an absolute crapshoot. You got a 50-50 chance, and depending on how you react to it, it could actually be worse than 50-50. So wait for the announcements. I think right now the most impactful announcement that you're going to see in the markets is not the FOMC announcement. It's the press conference after, 30 minutes later. So that 45-minute window of time, I would say just leave it alone. Leave it alone. Don't mess with them. That's why I tell you when earnings announcements are coming out. I tell you the economic calendar, so you're aware of those announcements and you can steer clear of those so that you don't get screwed when those do come out. So anyway, let's see. I think that's going to do it. I had some really good comments from Tom on Tesla, which I'm going to probably talk about more next week. Tesla and Twitter, right? Tom said, what about Twitter doing an IPO in 2025? I absolutely think it's going to happen. Absolutely. If he changes a few things, implements some different principles, it could be one of the biggest IPOs ever. It really could. But look, I will never bet against Elon Musk. Never. This guy it says win, 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 whatever he does. I know it seems crazy, but I'm not messing with Elon Musk. I will not go against that Twitter IPO. So I think it sounds like he overpaid for Twitter, but making a few modifications, tweaking this, bringing in this, adding some cryptocurrency application, you're going to bring in a whole lot of people like myself who be like, oh, you're using crypto? I'll use that now. I think it's a great, great, great thing. Elon Musk is probably a big trade now. What is an IPO? It's an initial public offering. It's when a stock first comes to market. So Twitter was publicly traded. It had done an IPO many, many years ago. I don't know if I can actually bring up the chart because let's see if it brings it up anymore. So here's Twitter. All right, so there's Twitter. Its last day of trading was October 27th. But if I go to a weekly here, you can go out and zoom way out, and you see a little dinosaur over here. Right? The dinosaur represents the origin of time. So Twitter's IPO was 2014. Well, when Elon Musk bought him, he took it private, meaning it's no longer public. You can no longer buy shares of TWTR. Twitter is not public. You can't buy shares. So what happened is, now that he took this private, he can at some point do an IPO, which means an initial public offering. So it can come to market again. I'm sure it will have a tremendous amount of fanfare, getting hugely pumped. And, you know, if he can increase subscribers, if he can increase utilization and get those numbers looking good, then he'll make money. He'll do well on it. Again, I'm not going to bet against Elon Musk. I think he will probably turn this into something massively successful down the road. But that's just a take. Okay, let me go into the economic calendar and earnings for Monday. I was going to say mañana. We're not doing stuff mañana. I am going to be relaxing tomorrow. Here's your economic calendar for Monday, the 6th of February. You'll notice not a lot of huge pieces on here. If you are trading the Australian dollar, I think that Skilled Stocksman here is trading the Aussie dollar. I think you mentioned that every now and again. You do have a pretty big announcement coming out on Monday, and that's going to be late at night. It's at 7:30 p.m., and that's going to be the RBA making a rate statement. Right now, it's expected to go from 3.1% up into 3.35, a 25 basis point increase. Now, why is that? Let's go here. Drew's call. I'm trying to remember Drew's call. I don't remember who Drew was. Damn it. I need to label these things better. You've got this continued downtrend in the Australian dollar, although it has shown a higher low, which is obviously a very positive thing. Right now, you're sitting at overhead supply, right around 71 on it. This will be a major market mover for the Australian dollar on Monday. So any Forex traders out there, careful, watch out for that one. Nothing else on here is really that important, that significant for Monday. Now, we are still in the midst of earnings season, which means I do have some earnings announcements for you. On the 6th, what you're going to have is Activision, Take-Two Interactive, Skywork Solutions, Spirit Airlines, boo, I know, Cummings, and On Semiconductor reporting earnings. So not the giant juggernaut names that, I guess I should show you that. Not the juggernaut names that we're going to have, that we have this week, but still some big names coming out later on in the week for earnings season. All right, that I think is going to do it. I'm already getting sloppy over here. I'm not, let's see, again, last minute questions. His next tea company will be Tinder. Oh boy. There you go. There you go, Larry. You had to go with Tinder for Elon Musk. Like he needs to have more kids, right? I mean, what, he's got 9 now? Let me see. What happened to those people who has Twitter shares before to go private? They forced them to sell? Yes. So what happened with Twitter was Elon Musk says, I will pay X amount of dollars per share. And if it's agreed upon, then all shares, regardless of what you want to do, are sold at that price. So if you, let's say you have 1,000 shares sitting in your E-Trade account, gone, and you get whatever, let's say it's $50 per share, you get that $50 per share in your account. Done. Trade is over. Okay, that's going to do it for me. I'm going to wrap it up. I got still have family here, so I'm going to go downstairs and enjoy the family and hopefully do something fun tonight. I hope you guys do something fun tonight. It's a Friday evening. Markets have been gratuitous, at least from the bullish side, for most of the week. A little bit of a give back on Friday's session. So I hope that you made money out there this week. Hope you enjoyed today's show. If you did, give me a thumbs up. Share this program with somebody else. Bring in some new followers for me. Let's have more fun. Do something good this weekend. I will see you all on Monday. And don't forget, Tuesday, we're going to have John Rowland on the program talking natural gas so he can scold me and reprimand me on my trade on natural gas and make me look stupid on air, which I am totally cool with. Have a great weekend, everybody. I'll see you Monday. Take care.